So, welcome to another stream, and as mentioned yesterday, if you have seen it in the preparation for this week, I said that this looks very good for the market, the current situation. And here we go, all-time high. We might hit the 4,000 and maybe close. Oh no, we closed already, sorry. The market closed at 4791, the highest that it ever was. Intraday, let us have a look if we see anything intraday. Days range, yeah. So basically, we closed at the highest point, and I'm curious how it further goes on. Let me know in the comments where you're watching from, and I can give you a shout out. And make sure to smash that like button. And make sure to follow me also on Instagram, Wolf of Dubai Denny. Yeah. So what is happening? Yeah, this morning the consumer spending came out by Mastercard has like a kind of index, and it shows that it looks great, and the people spending like crazy on those holidays. And yeah, so this fueled the market. Plus, as I said, no news are good news, at least for the overall market. And statistically, we have the Santa rally. So all in all, a fantastic start into the next year. And you know, the probability for that was 80%. Usually 80% of this week is green. And that's why it's quite, fantastic that we ended up the, week with, or begin the week and ended the year with an all-time high. Now, let's have a look. I want to jump with you. By the way, I need to put the studio obviously in green, as the market is totally in green, obviously. I want to show you another, because now the question is, okay, will it hold? Will it break down? What are the catalysts, and so on and so forth? And what are the best stocks to look at, right? I will go and show you a quick snippet from one of my favorite analysts, Tom Lee. And let's see what he says about the whole situation. And I will give you a spoiler. He thinks that this is just the beginning. Here we go.
Beyond just giving you credit and saying you've been right and saying 4,800 is your target and we're basically there. Let's talk about sustainability. How sustainable is this move, Tom, and for how long?
Scott, as a sort of, let's say, our base case, because I know we're into year-end dynamics and everything is unpredictable, especially COVID, I think the rally we're seeing has a lot of fuel. Because we know after Thanksgiving, when Omicron was first reported, that there was widespread panic and hysteria. AAII retail sentiment got to the lowest readings all of 2021. Hedge funds raised more cash, and their cash balances reached the highest levels in all of 2021. So there was so much panic following Omicron hitting, people essentially positioned it as if the market was crashing. So I don't think the rally in the last 5 days has put much cash to work. And I think on balance, the Omicron data is going to look better. Our data scientist, Tireless Ken, is actually forecasting the cases to peak in early January. And I think that means the market's already bottomed in, maybe it's 5,000 in early January.
Yeah, then what happens? Because if your scenario plays out and your technician's scenario plays out, I've got Jay Powell and company to worry about.
That's right, Scott. I think 2022 is really treacherous. So if we are at 5,000 in January, we could be down by June from there. But I do think for the full year next year, it's a double-digit year, partly because, we're still in a solid expansion. Monetary tightening doesn't kill bull markets, but it creates a lot of volatility in front of it. So I think if the Fed liftoff is in the summer, by December, the markets can look a little bit past that. And so I think we're still up 10% for the year.
I mean, I'm trying to get beyond. I think 2022 is really treacherous. I mean, that's what's going to be cut, right, and spliced out of this interview, and people are going to talk headlines that, Tom Lee thinks you can get out of 21 and into 22 with a bang, but then you could have some real issues. If you think that it's going to be treacherous, and once the Fed starts to get a little more aggressive, let's say by the summer, June, as you say yourself, what kind of pullback do you think we're going to have?
Scott, as you know, in the past 12 months, we had 4 corrections of 4% or more, but every time it felt like the sky was falling. So in 2022, in the first half, I think the possibility of a drawdown closer to 10% is probable. And so I think people are going to be in widespread panic, but that would be a buying opportunity. And then in terms of positioning, I think that's why FANG is our second favorite sector in 2022.
Interesting. Joe, you have a question for Tom Lee?
I do. Tom, you mentioned FANG, and given the significant contribution that it provides, if you are going to have a 10% double-digit decline, wouldn't we ultimately have to see the weakness that we have not seen in those mega cap type stocks in the first half of the year?
Yeah.
Joe, that's a great question because, yeah, you're right. FANG is, the market's is becoming increasingly FANG. Tech and comm services is more than 40%. FANG earnings next year are going to grow 30%, and PEs fell in 2021. So I think PE expands next year for FANG, and actually PE derates and re-rates every other year. So our base case sort of is FANG's up 30% or more. But I think it means that if there's panic around inflation and Fed tightening, the rest of the market takes it on the chin pretty hard. So I think FANG is pretty solid in the first half, and then everything else looks really shaky.
Okay, so there's a couple of things that he discussed. Okay, first of all, he thinks the rally will continue. He believes that the rally will continue until 5,000, until the beginning of January. There's a lot of fuel. There's, the health crisis. The current strain is going to collapse basically in cases, and this could mean a new all-time high. However, there is then the Fed. And let's have a look when the first Fed meeting is in 2022. 2022. Okay, let's have a look if we have already a calendar for 2022 for the Federal Reserve. And we have the general meeting. So end of January could be a very volatile state. Okay, it could be that we now going through a really much bull cycle, continue this bull cycle, and really hold on to it towards the beginning of January and New Year, and everybody want to start with stocks and so on. You have to imagine, like, the most successful videos on YouTube are actually usually stock market for beginner in 2022. Okay, so I obviously will also make one, so if you want to share it with friends and so on that want to start with stocks, then I will appreciate if you share this. But I believe that most important is that it's really a participation in the economy, as well as the stocks that you buy are pieces of a company. So you really should understand the company and why you buy it, and if it's going down, like for example, like space, why you should maybe buy more or buy every month to lower your price. So once it goes back to 30 to 40, you already a big profit, right? However, though, there is a lot of uncertainty into the next year. Interest rates, right? Inflation, all of those buzzwords of 2021 will be retested next year. So I think this is highly, to watch what they will say in January, the Fed. And as you said, it seems like green light for the next couple of days. So I'm quite curious to see what's going on. Also, a couple of stocks that are still not all-time high, even though the index all-time high, and while they are having a big part of the index, for example, Tesla, right? It's represent, I think, 5% of the S&P 500, and it's still not all-time high. it raised a couple of days because it was clear that Elon Musk is not selling stocks anymore. But still, it's the all-time high was, let's have a look, 1,243, and there's the delivery numbers that come out and so on. So there's room to grow. Also Amazon, we know that the fourth quarter usually is the best for Amazon, right? So we are very far away from the 3,700 all-time high. Also here, maybe an opportunity. What about Facebook? The same with the investment in the Meta. I think this is quite smart. With also about $40 away from the all-time high. What about, for example, I think Google must be very close to all-time high. Yeah, you see here's not much wiggle room between 2,900 and 3,000. But you have, for example, Apple, I think also very close to all-time high. All-time high was at 182. Yeah, very close to the $3 trillion mark. Very, very interesting. So let me also shout out here a couple of people from New York, from La Puente, California, USA, Jacksonville, Florida, Antwerp, Belgium, Northridge, California. So I feel that this could be a longer run into the stock market. We predicted it since before Christmas here, as if you're following the live streams. Other than that, the news is very thin because, you know, it's Christmas time, it's New Year's time. A lot of people are just enjoying the holidays as it should be. And that's why there's not much to talk about. And therefore, don't forget to smash that like button. Don't forget to follow me on Instagram as well. And I see you obviously tomorrow with a brand new video about 2021 and what happens in 2020.